What is a dividend? Presented by WallStreetSurvivor.com. A dividend is a payment by a company to its shareholders. These payments are a sign that the company is doing well and can afford to pay the owners back. Here's Don. Don has a design company called Don Studio. Don Studio has been around for 10 years and has really hit its stride lately by creating some killer websites for some huge clients. 3 years ago, Don raised some money to grow his business by issuing stock to investors. His company has 10 investors who each invested $10,000 and were rewarded with 1 share in return. Because Don Studio has been doing well, he has more profits than he ever had before. Now Don has 2 choices. He can reinvest the profits into the company's growth, or he can reward his shareholders by paying them dividends, as a kind of thank you for taking on the risk of investing. This reward encourages the now happy shareholders to keep the company's stock, and also makes the stocks more attractive to new investors and therefore more valuable. In the real world, companies that pay dividends use a mixture of both these methods. Dividends are usually paid out quarterly. Not every company pays dividends though. Generally, a company that is new or in the growth stage of its life needs all of the cash it can get its hands on to fund its growth. Companies that do pay out dividends are usually large, mature companies, but there are exceptions to the rule. You can see if a company has issued dividends in the past by looking at the company's div yield section on the quote page. So how do you know if investing in a dividend stock is right for you? Well, if you are more interested in a stable, regular income than investing in the next big thing, then dividend investing is probably right for you. But in general, everyone should own at least a few dividend-paying stocks in their portfolio. Experiment by buying dividend stocks on Wall Street Survivor today.